All right, guys, welcome to today's workshop. We're going to be talking about stocks. We're going to be talking about the market, what's going on. So get comfortable, get ready. We'll be starting in 15 minutes. We'll get Mr. Mark Putrino here in the back end. In the meantime, feel free to let us know in the chat what you're holding, what you're looking forward this coming week in the markets, what's on your mind, what do you think is going on in the markets right now, and we'll get started in about 15 minutes, guys.
two, three, four.
Good afternoon, ladies and gentlemen. We're going to start this off like we always do. Let us know where you are checking in from. Invest for Life, checking in from Portugal. Okay. Let's see where else you guys are tuning in. Let us know from where you are tuning in today. If you're tuning in from Europe or where you're from, we'd like to know where all of our members and people that watch us are from. So let us know in the chat, on the YouTube chat and the Zoom chat as well, because we're running the stream on a couple of places. All right, we got New Jersey from Hitendra. Good stuff. Illinois from Charlie. Charlie. Syria. Okay. All right, we got Germany. We got some Germans in the house. All right, guys, well, we're going to be starting here in a minute or two. I got Mark Putrino, Montreal, Athens, Greece. Good stuff. Nice. Good to see you guys are watching in from all over the world. That's pretty cool. We're going to get started here in 1 minute. Okay, guys. All right. So we are about to start here. Just let us make the final adjustments here, guys. We're about to get everything going. Hope everybody's doing well. Hope everybody's having a great day. All right. See if Mark Putrino is there. 1 second.
Good.
Yep. Okay. Hey, Mark, how you doing?
Good. How are you?
Good. Good to see that. Good to see you here. So let's get this started here. You ready to share your screens? Your screen, Mark?
Yeah. What should I get started with? What do you want to start on? Should we just go through the class, or should we look at the market, or?
So let's get a little touch of the recap of last week. What happened in the market, and where else? What do you see in the market right now? About a 15-20 minute overview of the markets, of what you're looking at. Also, let us know what's going on in the trading school. I know that that's been a great success here. It's been very fun. I've been able to attend a couple of classes there that you're doing. So I'm sure everybody here would like to hear a little bit from that as well.
All right. Let me see. All right. Let me just get my charts ready.
Yeah, no problem. Okay, Andrew says he's attending the school. What's up, Andrew? So there's a lot of students here. It's pretty cool. They always sneak in here somehow.
Can you guys see that chart now?
Not yet. No, I don't see anything there, Mark.
All right. Let me see here. All right, now you see Benzinga. Okay, do you see that now?
Yep, we see it there.
All right, cool. Well, the main thing we've been watching, like everyone else, is oil and then inflation, and we've actually made some pretty good calls on this, and we've been riding this oil trend higher. And when we did, this was before the classes officially started, but when we did a boot camp, and I don't know if that was with you or with Neil or both of you guys, but anyway, that was like right around here. And this is oil. That's what I'm looking at here. Let's see if I can.
Yeah, I think I remember that lesson when we were, I believe you mentioned that you believe that oil had basically hit that bottom at 60. And ever since you said that, it's just been a hard rally on oil stocks.
Yeah, so the reason why we thought that there was going to be a bottom was quite simply because the stock or the oil was in this sell-off era, and this is August, and we got down to this level here around $62. So in the Benzinga Trading School, I teach things that are common sense and logic. We don't use any weird like esoteric methods or anything like that. So one of the things that we focus on is, or the main things we focus on are which levels are important, which trends are important, and what's the momentum. So when we got down here, we got to an important level. And it was important because it was important before. It was support back here in May. So when we got down there, we were oversold. So this is kind of a fundamental of markets, is that when something is oversold and it gets to a support level, there's a good chance it bounced, and that's what happened here. So we've been following it all the way up, and then we hit this resistance here around 75. So that paused it for a little bit. But now we're back up in this uptrend, and I have no reason to suspect that it won't keep going. Although who knows? Something occurred to me yesterday is that if the economy really starts to stall out because of these supply chain issues and labor shortages, maybe oil starts to trade sideways or even go down because there'll be less demand for it. I mean, it's just like any commodity, right? If prices get too high, people are going to stop buying as much of it. But that being said, I think it still has some more upside. And one of the things that we talked about buying in the class was this BP, the old British Petroleum.
Yeah, I remember that one. And this is, you have a class for this, right? You have a class specifically for this?
Well, no, when we go through the class, one of the things that's good about our class that I like, and there's two things that I think make the class different. One is that, I have a lot more experience than most of the other people that are out there doing this. And, let's face the facts. If you started trading within the last decade, you've never really seen a bad market. So we talk about this stuff real time in class. And, anyone can use a book and look like they're great because books are all, perfect, and hindsight's 20/20. But we were following oil, and this is all in the class. This is all stuff I talk about. So of course we're going to make mistakes, but the idea is to teach the students about how to make their own trading styles. Like I don't want you to learn what I do. I want to teach you how to develop systems and styles for yourself, because everyone has a different personality. So a different system is going to fit a different person. Like what works for one person might not work for another person. What works for me may not work for you, and vice versa. But anyway, going back to this BP, we just saw this real clear level. Okay, this is the 28.45 level. Now in the stock market, this is one of the most fundamental rules that there is that certain price levels are more important than other price levels. Sometimes we know why they're important. Sometimes we don't know why they're important, but it doesn't matter as long as we can recognize that they're there. So this BP ran into this resistance level in around 28.45 back in June. What's resistance? Resistance is a large group of sellers that are all offering their shares at the same price. In this case, it's around 28.45. And I say around, it's never exact, but this level is really, really clear, but usually it's more of a range. But anyway, so the stock rally got up here and it hit this resistance or this wall of sellers. And that was enough to put an end to the rally, and then it sold off. Lots of times stocks sell off after they hit resistance. But we came back up here again, and now with oil being so much higher, that was the tip-off that we thought would lead to this level being broken. So I think we bought it like just above 28.45, and now it's moving up to 30. And you know, as oil goes, if oil keeps moving higher, this stock is going to keep moving higher too. So that's one of the you know, a lot of these trading classes, I think they try to make it too complicated, and they get over. A lot of these teachers, they become overly analytical, and they always look for like these secrets or everything. But that doesn't exist in the institutional trading world where I come from. We traders, we're focused on what levels are important, what's the momentum, what the trend is.
Yeah, and if you don't mind, Mark, just because I don't think we did this when we started, I know a lot of people here already know you from your background, but for those that don't, just give us a little brief insight into your career on Wall Street.
Well, I started off as way back when I got out of college as a stockbroker, and it didn't really go so well because I'm not really a good salesperson, but I went back to business school, and then I went into the institutional trading world, and I had my first trading job with Mario Gabelli. And then I had some time trading over with Steve Cohen, who from SAC Capital. So these are literally two of the greatest money managers, you know, definitely in our time and probably in the history of Wall Street. So when I was with Stevie, that's when I really got my interest in charts and you know, what traditionally you would kind of call tape reading, where you're looking at all different things and just looking for various dislocations of the market. That's kind of your strategy, as opposed to someone who has like set in stone with one strategy. But I left there to take the position as a head trader, and then I was a head trader at 3 different funds. And then I just decided to leave the industry because it really changed a lot, and it's really more of, you know, traders now are really computers for the most part. And the industry really changed. So I wanted to get into this teaching path. So I was, you know, I had a couple different stops, but now I finally found a place here at Benzinga where I'm happy, and I've been going to be here for a while. So yeah, that's my background. And I'll tell you, as someone who's been on the front lines with the real institutions, you know, there is no secret system, or Steve Cohen doesn't have some secret formula he found on a vision quest or something like that. You know, these guys are focusing on risk management, psychology, what are the important levels, you know, the same stuff that I teach in my class.
And well, you've also are a chartered market technician, right, for about 20 years?
Yeah, I got that about 20 years ago. So I think when I got it, there was less than 200 of them, and now there's a couple thousand worldwide.
Okay. Yeah. Well, that's really good to know how to read the charts and to know how big money thinks. So that's really impressive, Mark. And just for everybody here that didn't know, but let's go ahead and continue here with the workshop.
All right, cool. So another thing we were looking at is Verizon, and a lot of the students got into this, and so far they've been doing well because, let's see. All right, this is a mystery, and it's still a mystery to me. And, you know, maybe if someone has some insight and they want to let us know, but no one in the class knows. I've even called some of my trader friends that are back in the institutional world. All right, so this is Verizon, and this is its year-to-date chart. The symbol's VZ, Verizon. And this black line is the $54 level. So support is the opposite of resistance. At a support level, there's more demand than there is supply. So sellers can sell all they want to sell without knocking the price down. But now look at this. This stock, for some reason, broke the 54 level and went into a complete free fall. So we don't know why. I mean, there's been no official news release. I mean, this is not a penny stock or a meme stock. This is like a big, large cap, heavily traded, heavily followed company. And the stock just fell off a cliff. So sometimes when you see things like this in the market, it's some kind of like a dislocation. Like, for instance, my guess is that there might be a big fund or a big hedge fund or institutional money manager that went out of business that we haven't found out about yet, that's needed just to sell out of all their positions to raise money to give back to their clients. So they got to sell it at any cost. So look at this big fall. I mean, this is stuff like this like hardly ever happens. So anyway, we were watching really closely, and on the 13th, which was Wednesday, we saw it make this intraday turnaround here. Look at the 5-day chart. Yeah, like, so we saw, right, we watched this turn in class. So that's when a lot of the students decided to buy it. A lot of the students are option traders, it seems like. So some of them bought options, some of them just bought the stock. So, this is a bizarre thing to see a move like this with no news attached to it. This is the type of move you see when it's like, oh, the CEO got indicted for wire fraud or some major news hits the tape, but there really has been nothing.
Yeah, Verizon is supposed to be one of those safe dividend plays, right?
Yeah, I mean, it's like I said, it's this isn't a meme stock or cryptocurrency. I mean, these stocks really typically aren't that volatile, and whatever is going on there is going on in AT&T as well. Now look at this chart on AT&T. So some of the students, I think, were playing this one instead. So broke the support level up here around 27, went into a free fall. So yeah, I mean, if you look over at the news over here, there's just like nothing that could justify this sell-off. So again, my guess, and we'll probably know if I'm right within a week or two, is that maybe there's a big fund that went out of business that had to bail out. And the people on the street knew that, so they just kind of stayed out of the way and let them knock it all the way down. And now, if they think they're done, they're going to start getting back in. Because once this seller is done, what we do is all about looking for dislocations in the market, right? If something's in equilibrium, it's not going to move. Equilibrium means there's the same amount of buyers as sellers. It's just going to trade sideways. The price isn't really going to move. As traders, that doesn't really interest us. We want things that are going to move. We want things that are out of equilibrium. And when something like this happens, it is. So I'm going to give my medieval market analogy to describe what we do. So picture there's this old medieval market where farmers come from all around to this one market to sell their goods to each other and to the people that come in to buy them. And then suppose there's one road in and out of town, right? So one merchant posts a spy up in the hill to see what's coming into town in terms of the supplies, and say that spy sees, hey, usually there's 15 wagons of apples, but now there's only 2 wagons full of apples. So that merchant or that spy, working together, can deduce that there's going to be a shortage of apples. But what does that mean? The price is going to go higher. So they go back to town and they casually go around the town. They buy up all the apples. And then when everyone else comes into town and they need to buy apples, the merchant can turn around and sell the apples to the buyers at a higher price than they pay. So this particular merchant might have no specialty or understanding of the apple world, but they knew that there was going to be a disruption in supply, which would increase the demand and increase the price. So that's what we do. We look at the markets and we're looking for stuff that's out of equilibrium, because when there is, there's a good chance that there's some kind of move or reversion. So that's what we're doing, looking for reversions. So let's see, what else were we looking at this week? We've been looking at the financials because we had a big breakout on Friday. We'll have to see if this holds. So this is the financial sector. And one of the things that we tend to do is we go through each sector. The S&P 500 is made up of 11 different sectors. And by looking through these sectors, we can come up with trading ideas, right? Because the 11 sectors make up the S&P 500, and those sectors are all made up of individual stocks. So here we see the sector XLF is just breaking above this resistance at 39. All right, so remember, resistance is a big concentration of sellers. To see when the market got up here in August, the sellers took a stand and knocked it back. When it got up here at the end of August, again, the sellers took a stand and knocked it back. Got pretty close here, up into 38.90s. So what happened on Friday was the stock broke above, or this is actually an ETF. The ETF broke above this 39 level. So what does this tell us? Well, it tells us that the large concentration of the sellers who created this resistance are out of the market. So when resistance breaks, it's an indication that the sellers are out of the market. That means buyers have to pay higher prices in order to get their orders completed. So now what we would do is we could go to look at a list of financial stocks and see what looks good, see what doesn't look good. I mean, JP Morgan.
Yeah, JP Morgan reported they beat both Bank of America. I mean, they all seem to have rallied on it.
Which one, Rodrigo? Sorry.
Bank of America rallied. I know that they were all rallying up prior to the earnings, but it looks like they had a little dip right before the earnings and then shot it all the way up. Bank of America was stagnant at $20, I remember, but they've seen them be heading higher.
All right, so now this is Bank of America. Now, when I look at this, all right, we just talked about how the stock looked like it was breaking out. I mean, the sector, I'm sorry, the XLF, which consists of, I don't know how many dozens of financial stocks. But that gave us an idea to look for ideas in the financial sector. So now I come here and I'm taking a look at Bank of America, and what do I see? I see a stock that looks to me like it's overbought. And when stocks are overbought, they tend to reverse or sell off. So I'm going to put in some simple indicators here that I teach about in the class that are simple yet extremely effective, easy to understand. You know, some of the students are having success with them already, and we really just got started a couple weeks ago. So what do I mean when I say overbought? Okay, overbought is a term that traders use when something is above what would be its typical trading range. Right? Every stock or every market has what would be its typical trading range. When a stock or a market gets to a point above that, when it gets to an extreme above that, traders call that overbought. You know, the buyers are just taking it up. It's almost like panic buying, or the buyers are just going in there. They're really aggressive. So when things get overbought, they tend to reverse. So even though we saw the financial XLF was breaking out, I would look at this as a potential short idea. Nothing too dramatic, but if you're an option buyer, you could think about a put here because this is now an overbought stock. So let's look at these two simple indicators that are available in BZ Pro and pretty much any trading software package. The bottom one is what's known as an RSI indicator, okay? Relative Strength Index. That's what that stands for, RSI. These are the simple default settings, and this is an important point that everyone should understand. When you look at these indicators, they're all set to their defaults. You have the capability of changing those defaults because something with this default setting might not work that well, but if you make some changes in the default, you can make your signals more accurate. Like for instance, this RSI 14, this shows that it is measuring the amount that this thing has moved in 14 days. All right, momentum is momentum is a measurement of how far something has moved in a given period of time. If it gets to the high on an extreme, it's called overbought. So this is the basic indicator default, 14 days. This range over here is, the top is 70, the bottom is 30. So if this line in the middle here gets above this red line, it's called overbought. This indicates overbought conditions. Conversely, if it gets below, it is indicated oversold conditions. Oversold is when the sellers have like really been just beating it down, and now it's trading below what would be its typical or normal range. All right, so that's this indicator down here. Very simple. I suggest everyone give it a try. Just use the indicators that are the defaults to get started, but you can play around with them. Now on this price chart, I have another momentum indicator. These two red lines are called Bollinger Bands. And again, these are very common. They're in pretty much every software package. They were started by a guy named John Bollinger, who's a very renowned technician. And what these red lines are, the top one is 2 standard deviations above the 20-day moving average, and the bottom one is 2 standard deviations below the 20-day moving average. Now, why is that significant? Well, probability theory says that all trading should be within 2 standard deviations of the average or the mean. So when a stock gets above or below this, in other words, when it exceeds the 2 standard deviations threshold, that attracts these computerized algorithms and that are buyers, because they're going to expect a reversion to the mean. So look what happened here when it got below the Bollinger Band. It rallied right back up. So this would have been a really good entry point. It did here a little bit. Down here, this was another good buying opportunity. And a way that traders build models is you have different parameters or signals. This could be a 2-parameter model here. Just using these 2 basic indicators, you could say to yourself, when something is below the lower Bollinger Band, and it also has an RSI indicator below 30, in other words, you have the simultaneously 2 indicators showing oversold conditions, this could be your signal to buy. All right. The trouble with most retail investors, and I'm sure people listening to my voice right now know this, is that they get crushed because they guess. They don't have a reason for buying something other than they saw it in a chat room, or they're buying it on a whim. To be a successful trader, you need to take your emotions out of the process, and you need to not guess. You need to have a simple system like this that can give you signals as to when to buy or sell. So this dual signal here would have been a buy. This dual signal here would have been a buy. So now let's come up to where we are now. Now we have RSI showing overbought, and we're just getting above this upper Bollinger Band. So this is going to bring sellers into the market, or short sellers, and there's a good chance that they knock it back down. So if I was an options trader, and sometimes I am, sometimes I'm not, but if I was an options trader, I would be looking at this and waiting for a possible reversion. And it's not going to, I'm not saying the stock's going to crash, but there's a good chance that it drops back from where it is now, around 46.5, back down to, maybe 44 or 44.5. So it's a 2-point move, which if you're an options trader, that could be a really a big event. That could be a big move there. So the moral to the story is that, and one of the things we teach in the class is how to use these 2 simple indicators and other indicators to develop these models or these trading ideas. We don't want to guess. We want to take the guesswork out of it, and we want to take the emotions out of it. So that's a look at Bank of America. I mean, I guess we could look at some other banks now, because remember, we saw that the banking, or we saw.
Yeah, I think even Wells Fargo, which I'm not a big fan of after their whole thing with the ghost bank accounts, but I know that Capital One has been on a tear. Now we got to remember that all these banks are different, like their portfolio of business is different. You got Goldman Sachs, which does something different than Bank of America. Capital One, mostly renowned for their credit cards. That is a very high, it's more profitable, you could say, but you have investment banks. Every bank is different. They're not all the same. They're all banks, but they all act differently. If you put the daily chart on this, you'll see what I'm talking about. If you go really far off, this thing has not stopped running since that dip on March.
Capital One Financial.
COF.
Yeah.
Yeah.
Let me bring up the year-to-date chart. So that would be this one. Yeah, I see what you're talking about.
Yep, it's consistently been heading upwards.
Yeah. So let's see. There was Wells Fargo reported that had a big reversion after it looked like it was headed south. So you broke this trend line and then it was going down, but it had a big move higher. Man, there's a lot of money going into these financials. These are some big moves. So
do you remember when Buffett sold all of his airlines, and I think he doubled down on Bank of America? So like that's one of his biggest holdings. And I think the play was looking into the future, considering we're going to have a lot of stimulus, we're going to have a lot of money flowing out there at low rates. Eventually, the Fed is going to have to pick up and cut down on the tapering and increase rates. And now you have financials going up because of this particular. So I kind of guess he was kind of looking into the future, because now banks are like the hottest sector now.
Yeah, but we have to be careful of, and it's not something that plays out in a day or two. But there's really, considering what's going on in the economy and with inflation, and yeah, you can make the argument that when interest rates go up, financial companies do better. But it almost seems like it's like panic buying, so to speak. I mean, look at the way this S&P 500 just gapped up. See how like back here it just made like a nice move, nice slow and steady move, and then now it's like real money's coming in, and I don't know, maybe it's the old fear of missing out, and who knows, maybe that could be the end, a sign that we're getting close to the end of the rally. But this is something that we're going to keep an eye on in the class, and I have in the class 5 days a week. The students can just follow right along with what we're doing.
Yeah, and some people are asking about the school. So if you mind, I'll just share a quick screen. I'm just going to share just to show them a little bit about the school, since we have a lot of people asking questions here.
Okay.
Give me 1 second. Okay. All right, guys. Can you see that, Mark?
Yeah, I can see.
Okay. So this is basically what Mark is talking about. This is the trading school. We have all of the classes here recorded. This one's for October 18th. This is the one that's upcoming. So we have a class that is tomorrow, Monday. It's going to be on chart patterns. We have a midday update where we meet again at 12. We have the lecture at 7 to 7:45. From 7:45 to 9, you have a lecture review. And then at 12, we do a midday update where we also have office hours available upon request. As you can see, all the classes here are beautifully organized and uploaded. You have all the midday session. In case you miss it, a lot of people that work 9 to 5s or are from abroad, they might not be able to attend the live class, but that's fine because it's recorded. And we also record the Q&A sessions. So you have here your other classes there: momentum, trends, levels, introduction and philosophy to capital markets, and investment strategies and trading systems, market principles, analysis, and sentiment. And my favorite one, investment psychology. I've always liked the psychology part of trading. I feel like it's not discussed enough. But so yeah, you have all of your classes there. This is your homepage. As you can see, you have you can separate them, but you can look at what happened that day. If I want to go on Thursday, what happened on Thursday, Tuesday, Monday, Sunday. You can go through all of the classes that have been recorded. You also have your chat rooms there. Okay, so you have chat rooms there for class materials, for trading. As you can see, everybody's happy there throwing out charts. Mark is there. Mark Putrino.
If you keep going back, you can see where we talked about some of the ideas I mentioned. Just
Yeah, let's go. Let's see which ones. You want me to keep scrolling up? Let me know where, Mark.
Yeah, you can, if you just kind of, a lot of these are students, but oh yeah, like see that chart there? That's where we talked about gaps.
Yep.
Yeah, see that one, EDIT, that one that you're sitting on right now.
EDIT. Yep.
See,
Yep.
we talked about the chart that's above that. See how it gapped up, then it gapped down, then it gapped up, then it gapped down. Yeah.
We're expecting a gap up. Okay.
So,
Okay.
so I want to address this comment. Lauren Saunders says, I'm giving incorrect definitions. I mean, I beg to differ. I think I'm right. So if you can prove me wrong, I would be willing to listen to what you have to say. But anyway, Bollinger Bands are based on 2 standard deviations. But yeah, so back to the thing is what I do every day is I try to do either a technical analysis lesson or we cover something that the students saw in the class, and one of the students brought up that EDIT. Oh, okay, now you can see here that has got to be the Verizon.
That's the Verizon chart. Yeah.
Yeah. So that's probably from Thursday, or maybe that was from yesterday. So so this is in addition to the classes. We want to keep like a lively chat going here, and we're going to have we're working on a section that's just going to be for the trading. And see, this is a chart posted by a student. So the students will post a chart and say, what do you think of this? What do you think of that? So it's very interactive, and some of the other students are pretty, some of the students are pretty advanced. So there's a lot of student interaction. So it's going pretty well. And I do book recommendations there. That's a funny book. I'll go back a little bit.
Yeah, it's
this
a 3.
is the healthcare fund, but
okay, this book you recommended to them? Okay.
Yeah, I'll throw in book recommendations. This is a really funny book where the customer's yachts. I think it was written in like the 20s about Wall Street, and it's funny because it's so applicable today. Like, and I think the story is like someone's out there for a walk and they see all these yachts, and it's like, oh well, there's this broker's yacht, and there's that broker's yacht, and there's this broker's yacht, and they're like, well, where are all their customers' yachts?
Yeah.
So it's like one of those like timeless classics about Wall Street.
This is pretty interesting there. You put your own, you put a write up there. You put a write up there about the healthcare sector ETF. You're talking about their levels. You're talking about the trends. You're pretty much covering everything there, price action. And then you also throw in a chart with your own notes, right? This one, the healthcare one.
What we were doing is different things drive the market at different times, different sectors at different times. And we can see here a resistance. This 125 level was resistance, and then it became support. And we had a feeling it would become support because levels that were previously resistance have a tendency to convert into support, like we see here. It happens because of seller's remorse. The people that sold at 125 back in May and June, after the thing went higher, they regret selling it. So a lot of them tell themselves, I'm going to buy this thing back, but I don't want to pay more than I sold it for. So they place their buy orders at their selling price. In this case was 125. And we could see how what was resistance became support. So it's a really interesting fundamental that happens in markets. And as I said, certain price levels are more important than others. And in this case, for some reason, 125 is important. It's a psychological level, but it was resistance. It converted into support. If XLV rolls over again and gets back to it, it'll probably be support again. So we do this. The thing is like if you read a book or if you take a pre-recorded class, everyone's going to be right because it's all 2020. What I wanted to do is have a class that we go along with the actual market in real time, so we can really see what's going on. So far we've been doing good, and it seems like the students have been getting pretty enthusiastic about it.
Yeah, look what I found here. You were talking about the bank stocks that we were just talking about as well. JP Morgan, Wells Fargo, Bank of America. Interesting.
Yeah.
A lot of trade ideas there. A lot of trade. And this is part of the trading school, right? So in the trading school, for everybody that's asking, the trading school it does include this platform, this proprietary platform from Benzinga, which is where you have all of these chat rooms. This is full on included. You also have access to Benzinga Pro. You just click right here on this, in this left tab, it gives you everything. You have your settings there. You have your charts if you want to go charting. chat rooms. This is my favorite place. I usually hang around here because because Mark pretty much provides picks there throughout the day. In his class, everything in the class is taught with actual live market examples. And as you can see there, you have the live class if you're ready to tune in. But yeah, it looks like there's a lot of good trade ideas here, Mark.
Well, I put something in there every day, and then the students put in ideas. Like a student asked me, what do I think about that chart there?
Mm-hmm.
And what struck me out is just this clear trading range that it's been in. So this is the type of thing where if you're a day trader or a swing trader, you would be selling it at the top of the range and buying it back at the bottom. But this is something that like a student put in there. This is not mine. So a lot of the when I was in business school a long time ago, it's like I had two classes that I really remember that were really impactful. You know, forget all the finance classes and all that stuff. But I had a class that was taught by Larry Zicklin, who was a renowned money manager, and now he's probably a philanthropist if he's still alive. I know he was a big philanthropist. But anyway, it was our ethics class, and he would just come in and back then people still had newspapers, and he would put the Wall Street Journal on the table, and the students would form a circle, and he would be like, "All right, well, let's see. It was the class on ethics. So what could be a potential ethical story with whatever's in the front page? It's like, oh, there's a takeover. You know, was there insider trading? You know, is it okay to insider trade if you're using it to feed your children? You know, and you're starving." Like it would just go off on this free form discussion. And that's kind of what I want to have this class do, is to go off on these, different discussions and brainstorm, because that's where people really can come up with good ideas.
Yeah, I mean, it's something that equity firms and hedge funds have been doing for decades, right? They meet up and talk about trade ideas, right?
Yeah. And a lot of times students see stuff that I miss, and they make really good observations. And we're really just keeping it simple. Like for instance, tomorrow's lesson is on patterns. We do 8 lessons, and the lessons go Monday to Thursday. And
Friday, it's a recap, right? Like Friday.
Yeah, the Friday morning is like an open kind of discussion.
Mm-hmm.
But we go through these 8 lessons. The 5th one is chart patterns. 6th one is investment psychology. And in the morning part of the lecture, at the beginning, I'm going to go over the fundamentals of the lecture. Like tomorrow, it's on patterns. We're going to talk about why patterns form, what to look for. And then like later on in the second part of the class, and then in our noon review, which is for an hour, we try to take what we talked about in the class and apply it to the real market. Like, for example, tomorrow I might talk about patterns, and then I would say, all right, class, let's see, this is what an ascending triangle pattern is. This is what it illustrates. Let's see if you can find an ascending triangle pattern in the market, and then come back and show it to us, and then we all have our comments on it.
So this is an actual class from October 14th. You are talking here about a lot of different trade ideas, giving live market examples there. So all the classes are there recorded.
Is that the momentum class?
Yeah, momentum one. That's actually a pretty good one, because like I do trade options, I trade calls and puts, but just as additional leverage when I buy the stock. So obviously, you need momentum when you're trading something like a call or a put. So this is one of my favorite classes as an options trader. Yep. Yeah, we can always go back there. But yeah, guys, the trading school does include, just because we're getting a lot of questions, the trading school does include Benzinga Pro. It includes a full year tuition with Mark. Mark, whenever you're ready to take over the screen. And everything that you're seeing here is included. Mark Putrino's included. We have classes every day, Monday to Friday. We have office hours if you guys need them. All the classes are recorded. You can save them to your calendar. If you can't access the classes because you have a 9 to 5, or if you want to join Yemi, how do you incorporate a new student? Yeah, I mean, the link is in the chat to join. And once you sign up, you're ready, you're good to go. So yeah, I think are you good to take over the screen? Perfect. All right, let's get back to the session here, guys. I'll drop the link for all of you guys that want to join.
All right, so the first thing we talk about in the class, or when we go through the markets, is we're going to probably look at oil. Will be the first thing, and we already looked at that, because that's really an important theme now. Then we're going to look at the S&P 500, which we can see now is a little bit overbought. See, it's up to that Bollinger Band, which is 2 standard deviations above the 20-day moving average. So there's a good chance that this puts some pressure on the market. It might come in a little bit. Then what we would do to look for trading ideas is we'd look through the sectors, just like we saw that big move in financials. So these sector spiders are ETFs that track the market. For instance, track sectors of the market. XLK is technology. This tracks the technology sector. So all the big technology stocks are in this, Apple, Microsoft. And then we look for, do we see like what could be an obvious thing that sticks out? I don't really see anything obvious. Back here in early October, we talked about we had reached this support level and we were oversold, and that told us that we were going to bounce. If there's 2 things you can take away from today that could really like change your trading and give you a lot of good ideas, is just remember this: stocks that are oversold that get to support tend to rally. Stocks that are overbought that get to resistance tend to sell off. So when we saw this was getting to support, and you might say, well, how did you know it was going to be support? The answer is because it was support before. See this support level here? When stocks get to levels that we were previously support or resistance, there's a good chance they find support or resistance again. So by that, we were able to deduce that it was a good time to buy. And I know some of the students bought some of these XLKs, and so far they've done pretty well. Now, what would we look at for a short-term price target? What I look at is the recent high, right? See this recent high here around 159.70? See how that was such clearly defined resistance for like 2 weeks? So if XLK gets back up here, there's a good chance it's going to hit resistance there again. So if it's oversold, if it gets back above the Bollinger Band and gets to resistance, then there's a good chance it's going to sell off again. Because remember what I just said, overbought markets that get to resistance tend to sell off. So that would be the tech sector. The next thing we look at is healthcare, which is the second biggest sector.
Yeah, and then I'll open up here to a couple questions here. I have a couple questions here, and then we'll get some questions from the chat once you finish here this analysis.
Yeah, and then you can see that this is going back. This is from a few days ago, but I think it's in the chat where we got to support. Why did we think there was going to be support there? Well, because it had been resistance and it was oversold. It broke this downtrend line, and now we could be on the verge of a new uptrend forming. So yeah, if you got some questions, yeah, I got some time.
Okay, so I got a couple questions here, but I'm just going to type a couple ones here for the chat. Give me 1 second.
All right.
Okay, guys. So I'm putting in the question here on YouTube and on Zoom. And the question is, what do you think is the main factor moving the markets right now? Do you think it's inflation? Do you think it's China's economy?
I would have to say the main theme is inflation. Yeah, and you're seeing it in the energy stocks, natural gas. So yeah, that's the main theme. Because inflation also rolls over into what's the Fed going to do with the tapering, and the more inflation there is, the greater the odds are that they have to raise interest rates soon. So yeah, I think inflation and how it plays on interest rates is the most important thing right now, and that changes. I think inflation will probably be the headlines for the next few months, but different things come in and out of vogue at different times. So that's one of the things we're going to be talking about as they happen.
Okay. And I have a couple more questions here, but chat, everybody that's in the chat, feel free to drop your question. If you have a question about the markets in general, we're going to do takers after. But for now, just drop in any questions that you might have. If it's good, we might ask it here to Mark. Okay. So what are your thoughts on China's weakening growth? Obviously, they've been growing pretty hard and it looks like it's weakening. What do you think? How do you think that can impact stocks here in the US with high exposure to China, like maybe Apple or Amazon, any of these conglomerates, big companies?
Well, it's really that's kind of a tough question to answer because I would doubt any information that's coming out of China. So we really don't know what's going on over there.
Yeah.
Um, and I think a big thing will have to do with how they change their stance after the Olympics come up.
Hmm.
Um, but in general, for me, I would not invest in China personally because I just think there's too much geopolitical risk. But yeah, I mean, if things get bad there, it'll definitely have a big impact on things over here. Pretty interrelated markets.
Okay. All right. All right. So the next question I have here is related to supply demand constraints. So we were experiencing supply demand constraints. So we still are. It looks like now people in the ports in some states will be well have the option. They don't have to, but they have the option to work 24/7. Now it's estimated that even if this happens, if people work 24/7, it's still not going to be enough to completely take away the supply demand bottlenecks that we're experiencing here. So, what are your thoughts on that? How would you play it?
Well, I think it could get a lot worse because you know the, no one's talking about the real reason why these ships are there. They're saying, "Oh, well, the economy's so good, or the ships are back." No, it's because the longshoremen don't want to have vaccine mandates, so they're not unloading the docks, and the longshoremen control the docks. So they gloss over that, but that's a big part of it. The same thing with trucking. A lot of these truckers just don't, they don't want to get. And I'm not arguing whether you should get a vaccine or not. I'm just stating, what's going on. So that's my understanding. A lot of the truckers aren't driving because they don't want to have to get the vaccines either. So that's a big part of it, man. Now maybe the longshoremen are just using this as a way to get more money, which is which is what unions do. So maybe that's it. But I don't. This is not something that's going to like cure itself overnight. And people are saying, it's going to be cleared up in 2 months or 3 months. Well, you know what, dude? Look around whoever is listening to me. Look around the room that you're in right now. Right? Everything that you're looking at was in a truck at some point. Unless it's a plant you had in your backyard or whatever. But you get my point. And as oil prices are moving higher, that's going to bleed out into everything else. So, I mean, I'm 52 years old, and I don't ever remember there ever being like labor shortages like there are now in my career. So,
Yeah, I was gonna go to that next. We have record people like in record levels are quitting their jobs, which doesn't make sense when people need jobs, but then you have these stimuluses that are given out. So it is creating, and also that impacts the tapering and raising rates.
and just think about this. Just think about this, okay? I was just looking at my bank this morning, and I was like, I have a little bit more money than I thought I did. So I looked at my statement, and I got $388 for the child tax credit. I have 2 kids. I mean, look, man, I'm not a billionaire, but I don't need that $388. Like, why are they sending money to people that don't need it when there are people that do need it? So, I guess it's just, I guess if you give a politician a chance to give away free money, they're not going to say no. But it's like, I don't need the
Yeah.
$388 a month. I should be going somewhere else, or it
But
shouldn't be going, period.
so it's kind of hard to make the prediction that the economy. I mean, look, talking about the stock market's one thing, talking about the economy is another one. It's hard to make the assessment. Do you think it's hard to make the assessment that we are going to have a stronger economy as we have record level of people quitting and highest number of jobs that are not being filled?
Do I think so? No, I think we're going to definitely. I mean, I went to the pet store yesterday, and half the shelves were empty. I went there to get some stuff for my dog, and yeah, I mean, I think it'll probably get worse before it gets
Yeah.
better. And then, I mean, think about it. I mean, we have this transportation crisis, and now we find out that our transportation secretary is on vacation for paternity leave. So, I mean, it's like when you have a crisis, you expect all the people to
Yeah.
show up, right? I'm sorry, my dog is scratching on the dog hair. Hey, hear me talking about it. So I don't know. I mean, I don't know what's going to happen. But my guess is it'll get worse before it gets better.
Okay. Yeah, and that's absolutely it makes absolute sense here. So and we got a good question here on the chat. We can go over a couple of these. So Dustin Bramley says, do you think with inflation rising now, it's a good time to get into consumer staples?
Um, well, I think what you're asking is, yeah, I think in general you can say that, because what consumer staple stocks are, for those of you who don't know, staples are companies that are going to do business regardless of how bad the economy gets. For instance, like food is a staple or medicine is a staple. So the thought is, if we're going to have inflation and if the economy is going to be weak, it could be what we call a flight to safety, because those are the stocks that are going to, those are the stocks that are going to outperform the rest of the market, based on the theory that they have businesses that aren't going to be affected by the economy. So yeah, I do think that's a statement that makes sense.
Okay. All right. All right. And let's see if we got any other questions here. Um, does the trading class cover stocks and options? Yeah, we talk about everything. We talk about everything. And also remember, fundamentally, you shouldn't be trading options or anything if you can't read a chart. And we go over these, we go over this as well in the trading school, where we talk about what's the right, I mean, what you're looking at right now, it's a sneak peek of what we talk about in the class. But yeah, we do cover all that. And Mark is sharing his trades as well. Yemi, we did go over some of those. He pretty much called the bottom on oil when it hit 60 and still rallying. So, and that was like 2 months ago, I think. Um, let's see. Should we go short under current potential inflation news? Do you think that's one reason by itself, Mark, to go short? And also short on what?
Yeah, short on what? That's too
Yeah,
broad of a question.
guys, if you guys want to ask questions, please be specific because we can't read your mind. But let's head over here. I got a question here for you, Mark. So we talked about jobs, we talked about tapering, we talked about what is your take here on this infrastructure deal? It seems like it's been lingering on for 2 years now, and uh, where do you think this will go? This infrastructure deal, who will benefit? How do you trade around it?
Well, I mean, the obvious play is the stocks like Caterpillar or 3M that will benefit, like the heavy duty construction companies that will benefit, if and when it gets passed. So, those are the obvious things. But I think it's still a little too early to know if it's going to get through. I mean, I know we certainly need it. Man, like I live in Connecticut, right by New York, and not too long ago I was driving over the George Washington Bridge, and there was a traffic jam, so I was going really slow, and it's like, so you can really look and see the bridge, and man, you're just like, man, this thing is going to like collapse. There's holes in it, it's all rusted out. So I guess I'm digressing a little bit there, but I guess we need infrastructure. So at some point, the Republicans and the Democrats will come together on it, and there's going to be something there. And I would say that's when you look at companies that are, the boring companies like construction, companies that make asphalt, companies that make concrete.
Yeah.
That should be the play there.
Okay, yeah, and I actually do have some of those in my long-term portfolio. I do have some of the materials. I have a background of financing and construction, so those companies are not going to go away. We have roads that are so messed up everywhere. Like there is a ton of work to do. Okay, so let's see here. Toady is asking, do you think commodities could be a defensive play against inflation? For steel, for example. Now, before we do get into that question, keep in mind that they don't only depend on U.S. markets, right? A lot of them depend on the Chinese markets, right, Mark? Some of these commodities.
So but if it's somewhere, yeah, I mean, like, yeah, for instance,
that's why they all tanked. I think like a month ago or something. Every commodity stock went down because of fears from China, unrelated to inflation.
Well, yeah, I mean, the inflation stocks are already doing well. Energy companies are higher, like we saw with the oil, natural gas companies, precious metals. Precious metals aren't working out as well as people thought for some reason. I think maybe because a lot of that money may be going into cryptos. But if you look at my chart here, this is the XLE. This is the energy spider, which is the energy sector ETF. So, we can see how we've had a strong rally here. The thing about, inflation it hurts most companies, but some companies it does help. Because if you're an oil company, most of your assets are oil. So if the price of oil goes up, you become more valuable. and then the stock becomes worth more. Natural gas has been soaring. I think aluminum prices are at all-time highs. So, if you know, I think I even said on the class, like, this would be a way that someone could do a little bit of a hedge, even if they're not an experienced investors. Natural gas prices are going to be about 3 times higher this winter than they were last winter.
You think they're going to go higher?
They sort of look like it. I mean, they were like $2 last year, and now it's around $5 or $6.
Yeah, and then add the oil shortage.
You're
head
natural
on.
gas and oil are, obviously they're related.
Yep.
So if you're going to be paying more money in natural gas to heat your home, because natural gas is the most widely used energy source in the country, maybe you invest in some of the natural gas companies, because you're going to lose money on your bills, but you'll make money on your investments. So it could be kind of a hedge to offset your losses.
Okay, great question, guys. And just so you know, this is something that we touch on the trading school. Mark Putrino, like I said, this is a sneak peek, but we have hour-long classes, about an hour 30. Then we have another midday. We meet again. So this is just a sneak peek, guys. The actual school, if you do want to join, the link is on the chat room. But let's continue here with the. Oh, by the way, I do have to welcome somebody here, Mark, new member, new part of the family here. So. Just want to welcome here a couple of people, Jay, Tommy, and Hassan. Welcome to the trading school, guys.
Yeah, thank
you. All right, so let's head over here. Let's get back to the class.
All right, so anyway, this is the energy ETF, and we can see here with the Bollinger Bands, it was a good time to buy. But so this is energy. So now the question is, well, energy's breaking out. Let's look at some energy stocks. So we can go to our list of energy stocks in our screener, or say in BZ Pro, and we could get a list of companies in this industry, and then we could just look at the charts of them and see if we could come up with some ideas. Sometimes you're going to look at something and you don't see an idea. Well, that's cool. Just, move on. Only trade on things that you have a conviction on. So because this is breaking out here, this tells me that a lot of companies within the industry are going to be breaking out as well. So that's a way to get ideas, is to look at the sectors and then look within the sectors. So let's see, what do we not look at?
Okay. What other themes are you looking at in the market? I went over like 10 things that I think are impacting the market, but you can see that some of them are related. They all come back to inflation, which was your point.
Yeah, I mean, I think that's pretty much the driving theme now, and it's frankly, I'm a little surprised at how strong the market was over the last couple of days. Oh, here Amazon's a good example. If you want to bring up your Amazon charts at home of something that we talk about.
Yeah,
I mentioned, right? If
you guys are students, for those that are students here and you already have your trading school, feel free to follow the charts here with Mark. But this is Amazon, AMZN, right? And this is a perfect example of when I talked about how there are certain price levels that are more important than others. So clearly the 35.30 level for Amazon is important. It even goes actually back to here. All right, let me get rid of all these things that we just started out. All right, so this is Amazon. I'm going to just get rid of all the stuff on the chart here so it's easier to read. All right, so remember we said that there are certain price levels that are more important than others. So I'm going to take this horizontal line that's up here on the left, go down to a horizontal row, and I'm going to put it right at 35.30. So now this is an example of an important level. This is a really clear example of an important level. See that back in August, this is right where Amazon peaked, 35.30. So now we fast forward to April or early May, April 30th. And where does the stock ran into resistance? At the exact same level, 35.30. All right, so then we come into June
And it's hard to see, but the top of this these days, we're all just below this 35.30. All right. So important level, it's resistance. Then it breaks down. And what happens? This 35.30 level becomes support. All right. See that? Remember, levels that were resistance can become support. This happens because of seller's remorse. The people that sold here thought they did a good job when it went lower. They thought they did a good job when it lower, but then the stock breaks through. And now a lot of these people say, damn, I made a mistake. I'm going to buy it back. So they place their buy orders at the same level that they had their sell orders at, and that converted the level into support. Now we can see in early September, the level became resistance again. So what was support became resistance. Now this happens for the opposite reason. This happens because of buyer's remorse, not seller's remorse. So people bought here. They thought they did a good thing when the stock went higher. And then it fell through it. And now a lot of these people that bought it say, you know what? I made a mistake. I shouldn't have bought this. I want to sell it, but I don't want to lose money on it. So what I'm going to do is I'm going to place my sell order at the same level that I had my buy order. So as a result, they placed their sell orders at what level? 35.30, and this level converted back into resistance. So now, if we get back up here again, there's a good chance we will. I'll bet you we see resistance there again. So this is just an example, a really good example in real time. I'm not showing you like a book of something that happened 10 years ago, how there's a certain price level that is more important than others. So then you say to yourself, well, that's great, Mark, I believe you, but how do I make money off of it? Well, a lot of it could do with your order placement. Like for instance, say you bought the stock and it's rallying and you say to yourself, you know what, if this gets to 30, say you bought it here, right? And you can see another important level here, how this will support 3,200. But you could say you say yourself you bought it here and you say, well, you know what, I bought it at 3,200. If it gets to 3,600, I'm going to sell it. So guess what happens? It rallies, it hits the resistance, rolls over, and comes right back down to where it started. You missed selling it because you didn't realize there was resistance there. As you realize there was resistance, you would have sold it just below it or at the resistance, and you wouldn't have had to ride it back down. Same thing with buying, right? If you want to buy it and say it's fallen here, I mean, obviously in the long run, this would not have been a good thing to do. But say you wanted to buy it when it was trending lower here, you could say to yourself, well, gee, where do I think this sell-off is going to end? Look on your chart, look back in the past, and you say, all right, 31.90 was support. So if the stock's going lower and you want to buy it, you'd say to yourself, all right, well, when it gets down to around 31.90, that's where I'll place my buy order because there was support there. If you said to yourself, I'm going to buy it if it gets to 3,100 down here, you would have missed it because you didn't know there was support. So by knowing where these important levels are, it helps you decide where to place your buy and your sell orders, and it can also help you decide where to have your price targets. So that's the Amazon is a really good example.
Okay. All right. That's a very interesting analysis there, Mark. Very interesting. So guys, drop your tickers. It is time for us to go over some tickers. We went over the trading school, how to join, showed you the platform, everything there that's included. It includes Benzinga Pro. It includes the trading school. It includes a courtesy complimentary laptop as well for the first 10 people that join. So we have a couple more here. So we have a ticker here. I love this one, Affirm. I've been on this. It's part of my long-term portfolio. I traded on calls. And this is actually a pick that we gave out on the trading school when it was at $108. Okay. I gave you guys this pick here for the trading school only. So trading school members did get this. I think it's at a 150 now. So this is the buy now, pay later thing. They're partnered with Amazon. They're partnered with Apple Pay. Target was the big announcement. That last big candle you see, Mark, that was the announcement that they partnered with Target, which is, kind of like a mini Walmart. So what are your thoughts on Affirm? This one's from Christopher Foster.
Well, it looks like we just broke this important resistance around 143. All right, so now what you want to do is see, remember we talked about how what was resistance can turn into support. Well, now you want to see if what was resistance, this 143 level, becomes support. Because after things break out, they tend to spend a little bit of a time consolidating, meaning trading sideways, or there's a little bit of profit taking like we see here. So if this level around 140, I would say just this black line is 142. If this level here becomes support, if we convert into support over the next few days, then that could set the stage for a new uptrend. If it doesn't convert into support, then we're going to see a move lower. But but in markets that are going higher, levels that were resistance can become support, and that's what we need to look at here.
Okay. All right. So we'll keep an eye on this one out on the trading school. I mean, we already made some profit there from 108. I mean, with calls there, you would have done insane. And we actually talked about it when it was at 108 before the big rip. So there was a little big rip and then was rejected downwards. So it hit that same technical level that you do talk about, that 108. So the next one we got here, Mark, is Suncor Energy.
What's the symbol?
What is the George TT symbol for Suncor? SUNCOR. I think it's Sun. SU. Yeah. Okay. SU. Yeah, that's the one.
I would imagine it's probably going higher if it follows oil. So yeah, so you can see this kind of follows oil. It's a little bit behind it. This looks a lot like the chart of Exxon. But yeah, I mean, if oil keeps going higher, this thing's going to keep going higher. The way that you may want to trade this is if you're long it, you just watch this trend line. Excuse me. If you can't decide where to sell it, and you just wait until this uptrend line breaks,
Until it breaks.
That would be your sign to sell.
You think it's going to break when it hits that $31 level?
There's probably going to be resistance here, but this is more of an oil play. You know, if oil keeps going higher, this will keep going higher.
Mm-hmm.
So in a situation like this, I would just be more concerned with what oil is doing than with previous levels than on this chart right now.
Yeah, and if you are an OG trading school member, okay, you know who you are. You started the trading school with us. You remember this play. Well, you remember when we were talking about oil, when it bottomed at 60, and we all loaded up on oil stocks. So, I mean, this is part of the benefits, right, of being in the trading school, right? We want you to learn and we want you to earn, right? That's fun. We don't want you to learn while you lose money, the rough way, the tough way, the way that I did it, because there wasn't no such thing as the trading school. Now, if you are starting, this is probably the best time to do it, because you have the mentor, Mark Putrino, not only teaching you and showing you how to learn and how to understand the markets, but also to profit while that happens. So we're talking about, it seems oil stocks are hot again. You see, that's when you're chasing stocks. We were already in the entire oil stocks before it became a hot thing. And that's kind of what we're trying to teach you guys, to be able to look at a little bit into the future and be able to use these levels, Mark's knowledge and understanding of markets, to profit from this. So this is a great call, great one, Mark, for calling the bottom on oil on 60. Now it's at 70 something. And the next ticker that we have here, I do like this one. This is another one that's in my long-term portfolio. We got Snapchat.
Okay. Yeah, I can only take a couple more because I got some family stuff to do in a little bit.
Yeah, we'll take some tickers here. Then Mark's gonna head out, and I'll stay answering any questions about the trading school, guys.
This is actually in one of our presentations. As in an illustration of a clear level, a clear resistance level. See the 64 level? But now if I look at it, I mean, it's up, it's in a little bit of an uptrend. I've looked for resistance around here. Excuse me. But you know, from a trading point of view, I don't really see too much going on here. It doesn't look like it's going to make a move imminently. But if you like it long term, you know, it would certainly be a good time to buy it or hold it. But nothing really sticks out. Oh, actually, you can see this. The 64 level was important. But you can also see now how 70 has been an important support. So it's a good example of how there's certain price levels that are more important than others. So, you know, if it goes lower and you want to add your position around 70, that might make sense. But yeah, what I see here is, you know, we just have another example where can see clear levels that are important. Now, say this thing starts to head south and someone says, well, if it gets to 69, I want to buy it. Well, it might not get to 69. It might find the support at 70 and then rally again.
Okay. All right. Let's move on to the next one here. UPST. We're just going to go through them really quick, guys. A couple more here because Mark has to attend a couple things. All right.
Yeah. Now, I mean, this to me looks like it's overbought. Yeah, it's been on quite a tear though. So let's put our Bollinger Band and see how that looks. Yeah, you see how we're above the upper Bollinger Band now? We'll make it a little bit easier to see.
Hey, Uma. Yeah, it's still at the same price. It is that, yeah. So I mean, whatever price is in the checkout, that's the price with the discount.
So yeah, so we can see that we're overbought here on the Bollinger Band and on the RSI indicator. So when we got overbought here, it was a sign that it was going to go into a sideways trading consolidation. Same thing here. So it's a little ahead of itself. So it might have some more sideways. It might have a little bit of sideways trading before it keeps moving higher. That's what happened here and here. So I would say a little ahead of itself, might come in a little bit, but longer term, it still looks pretty good.
Okay. All right. Let me know how you're doing with time, Mark. Let me know.
I got time for maybe one or two more.
Okay. All right. Let's go with Netflix.
I got to go over to my mom's house because it's my niece's birthday party. I think she's 7. Exciting stuff. All right, so Netflix looks like it's in a consolidation period. We can see how this level 560 was important at one point. So this could be what we call as like a little flag pattern. And what a flag is, it's a break in the trend. It's like the buyers are taking a break. They want to see if they leave the market, if the price will come in a little bit. And it's what's known as a continuation pattern. It could be having that right here. So basically what happens with this is that, so the stock started to rally here, right? Get rid of this guy. The stock started to rally here. So it made this big move up. So a lot of the buyers say, you know what, let's pull back let's leave the market a little bit. Let's see if it comes back in and we can get a better price. So they leave the market, it kind of trades sideways, comes down a little bit. Then the buyers say, all right, well, it came in a little, let's get back into the market. They take it up again. Now we could have the same thing happening. So these little flag patterns are what are known as continuation patterns. So if it plays out like they usually, but not always do, it means that this thing is about to start moving higher again. So that's what happens with these little flag patterns.
Okay, so you're expecting a move higher.
Yeah,
just
it looks like it's just taking a break from the trend, and the trend might kick back in and move it higher.
Okay. All right. Well, trading school members, there you have it. That's Mark's pick of the day, Netflix. Fair to say. And we go over this. We do this all the time in the trading school, right? We have picks going on there left and right. So Mark, I'm going to stay here answering questions with some of the folks here. Mark, we definitely want to thank you for your time. We know you're a busy guy. We appreciate all the hard work you're putting into the trading school, giving those classes Monday to Friday. And final thoughts here, closing remarks, Mark, for anybody, why they should join the school on your end.
Well, because it's common sense, and we look at the markets in real time. I don't think you're going to see that anywhere else. It's based on common sense, logic, levels, trends, momentum, and how we look at it in real time.
Okay, absolutely. Love it. Love it. All right, guys, join Mark on the trading school. The link is in the chat room. I'm going to stay answering a couple questions here. Mark, if you want to take off, it's fine. No worries. I'm going to be sharing the screen here. I'm
Okay,
going to show
everybody.
you guys.
Thanks for tuning in, and I hope to see you in the class.
All right. All right, guys. So I just want to move here to the trading school. Wanted to give you guys a little sneak peek of what it is. A lot of you guys are already familiar with this. For all those current members, you can see there, the classes are all pretty much saved. So if I go to October, well, that was a Sunday. But if I want to go back to, let's say on a Tuesday, October 12th, that's when we were going over levels, right? So you have here the class itself from the October. You also have the midday update, which is when we get together, all of the classmates. We pretty much recap what we went over. We want to make sure that we understand the material. Obviously, the material there is, it's pretty explained by Mark. So it's not like just given out there. These classes are not pre-recorded. These classes are recorded live, and then we are posting them to the chat. I'm sorry, to the school. And we can actually take a little sneak peek, guys. If you guys want, let me know which one of the classes that you saw you want to get a sneak peek of, right? Let me know if you want to look at the investor psychology, or if you want to look levels. Anthony wants to take a sneak peek at levels. All right, I can't give you guys too much, but let's just go over this class here really quick. Let's see what Mark is talking about. Very easy to use. Okay, the event has not started yet, so this one hasn't started, guys. Okay, let's see. So let's go to the home page where we have all the classes. All right. Introduction Philosophy, October 11th. Okay. All right. So you can see there that class hasn't started yet, but we do want the recording. We're always available to get it. You have your live class there. Whenever there's live class, you just click here, live class. And since the class hasn't started, you won't be able to get it. But this is the video library. In this video library, you'll find all the classes there that you want, all of the ones that you're looking for. So if you're curious about joining any of the classes right there, you wanted to see levels, okay? You wanted to see levels. Christopher, it's $12.97. It's $12.97. That's the final number when the discount is applied. You just got to click on the link that we put in the chat. I'll go ahead and post it in there again for you guys. This expires like in a couple hours. So make sure you get in while you can, because they will jack up the price. Definitely. Just because, I mean, this does have Benzinga Pro. You have somebody like Mark Putrino, who traded right next to Steve Cohen and Mario Gabelli, literally there all day, going over trade ideas, answering your questions, giving you education. Feedback that you guys have on any specific trade, you also get that. So you get everything. You absolutely get Mark's full insight. This particular class, I did enjoy it. There you have Mark Putrino, the man, the myth, the legend, CMT, chartered market technician. He's a professional market analyst when it comes to charts. These are the people that they put in charge of hitting the buy and sell button at these big funds. They manage pension funds. They manage billions of dollars. So you get that education here. Let's take a sneak peek here. There you go. Square Inc. I mean, this is ongoing. Goldman Sachs. I'm just kind of going, like, flipping through these slides, giving you do's and don'ts. Interesting. We're going over all the different types of indicators and really explaining what they do and how they function and how to use them. This is all high level knowledge, guys. You don't get this on Wall Street Bets. All right. So this is very interesting. I do like how the format is set up. That's really interesting, because honestly, at the end of the day, you do want to learn from somebody that's been doing it. So let's guys, any questions about the chat? Just because I can actually I want to go over them with you and show them to you live. Louis Brown, hot damn. Exactly, that's what I'm saying, man. Like hot tamales here, bro. This is off the chain. It's just crazy how we were able to get this together and pieced up, because as a trader, I can tell you that when I started, none of this was out there, and I was just learning on my own, which led to me obviously blowing up my account twice. So I took that as a lesson, and I've really started to follow people that know what they're talking about, that have real experience in managing institutional money, right? Retail traders like that, you don't move anything. You don't, if you want to be profitable in the market, you got to learn how to think like the big players do, because they move the markets. And that's kind of why I do look for that type of education. Mark Putrino obviously has it. And everybody that's been in the chat room is banking pretty good. I mean, the Affirm trade was insanely good if you traded options with it. So you can see Mark there giving a full detailed explanation there. Every day. And we do this every day, guys. The course, Maria, is for 12 months from when you start. So that'll be the full year. And you guys get to keep the discount, because once this price goes back up, which it will, you will not, you pretty much, you'll have to pay whatever the price is today, and today only. If you do purchase it for this price, you keep that 70% discount forever. So even once it goes back to 4, 5, 6,000, it doesn't impact your subscription, because you will be renewed at the same price. So it is a lifetime discount. So you're going to have that 70% off forever. Next year, same thing, and so forth. Damaris, yes, I don't know how to read the chart. We were all there, man. I was there too. We still there sometimes too, because the market's so crazy. But if we look at the fundamentals of how the market behavior seems to operate, it becomes a little bit easier to spot these trends. So Marla is asking about the refund policy. Guys, we have a 7-day money back guarantee period here for the trading school. So you have a full week of class, live hours. Anthony Farrell. Okay, let me get to you in 1 second. Marla has another question. Have the renew each year? Yes. Yeah, so if you renew, because education is a lifelong process. The market from this year is not going to be the same market from 2 years from now. And you can definitely say the market in 2020 is not going to be the market for 2021, which it hasn't. And that kind of gives you like a general understanding that education is a lifelong process, and having a mentor there helping you, somebody who's managed like billions of dollars in an account, that's the person that I want to learn from, because that's the person that moves markets. And if I want to trade with the big money, not against it. Okay. Little lesson there. So yeah, that's correct. You will keep the price. You will keep the renewal discount. Make sure to change your chat settings, guys, to everyone, because that way we can all see your questions. Everybody's learning from each other here. All right, let's go over a couple more questions here. I have Dustin says it's an investment. Absolutely, man. This is an investment. Literally, I trade options. I trade calls and puts. I'm buying calls that like I'll spend like 2 times what the trading school is. And people that trade with big accounts, they know that for what you're investing in here with the trading school, it's nothing compared to what you could lose by not knowing what you're doing. And I get these calls from people that, have put in like $400,000 into the market with no education whatsoever. And they lost it all. And it's really like, it can really mess you up if you do that kind of thing. So get the education before you blow up your account. And if you already did it, don't do it again, and get educated. Because otherwise the market will take your money. The market does not care. There's no feelings in the market. Anthony Farrell, what are the live hours? So Monday to Friday. Okay. Monday to Thursday, you have classes Monday to Friday, but Monday to Thursday, you're going over the actual courses. Friday, you do a recap of the courses. So you meet Monday to Friday from 7 a.m. and these are Eastern hours. Okay. New York Stock Exchange hours. 7 a.m. to 7:45, you have the lecture. 7:45 to 9, you have the lecture review. Then you have a break. You meet again at 12 and you do a lesson recap. And these hours are not set in stone, meaning that they could extend for longer if need to be. If the questions are there, if the students need it to be, it can be extended. And of course, all of this involves open market discussion. So you're welcome to talk about any trade idea or about any stock in particular or about anything that you're looking at in the markets. We have a chat right next with the actual class. We have moderators there that are making sure that no trader gets left behind. So it's really cool because we have a no trader left behind policy and we apply it to everything that we do. So if you have a question there, it gets addressed, and it's a learning environment. It's probably the best learning environment that you're going to see. I know that when I was starting to trade, I went to these public pump and dump chat rooms. And if I asked a question about what is something, people just dog on you, like, get out of here. There's, they're rude and stuff. So it's really discouraging, when you're starting out. And that's why we're doing things different here. We want it to be okay for you to ask a question. It's okay to not know, right? And that's why you're asking questions, because you want to learn. So that's why we encourage everybody to be as participative, to participate as much as you can, so that you get the most out of this. Because I might have an issue with my trading, and Marley might have a different issue with her trading. So yeah, let's see the question. Same question as Janae. Okay. Janae, when you renew, will include Benzinga Pro also? Yes, you get Benzinga Pro as long as you have the trading school. It's better than just getting Pro. Pro is more expensive if you get it by itself. And ultimately, it's because this is full-on education, right? We want to make sure that everybody's able to join. So when you renew, you will keep your Benzinga Pro. Nothing changes. You're locking in the deal for life, okay? So yes, you will keep Benzinga Pro when you renew forever. Marla is asking, can someone who works 8 to 5 be able to trade after 5 p.m.? Yes, you can still trade, but if you're referring to the classes, yeah, you can also be in the classes because they're all recorded and uploaded to the portal let me just go back there to show you. I was just giving you guys a sneak peek of the class here. Let's go here to the homepage. So to the homepage, you know what's going on. Like as a student, when I was going to college, I remember I had a portal and I could see what classes I had in my schedule. This is similar to that, right? You can see what's coming up. You can prepare for your classes, your pen and paper ready. And you have a video library here where you can access all of the previous recordings as well, right? And the updates, the midday updates, which are very informative and very educational. It's like a Q&A, and everything is going to be recorded for you. So if you want to go to Tuesday, October 19th, you have, obviously you can't watch class that we haven't recorded because all the classes are recorded live. They're not pre-recorded. I know that a lot of places, for example, they just have, some old videos they give you. Nah, these are live, like videos that we are doing every single day for you guys. Anthony, I'm glad. Okay, so we got your question answered. All right, let me post the link because a lot of you guys are asking about it. So that's the link. I posted the link in the chat rooms, but keep the questions coming so that we can make this a little bit more educational for all the people that want to learn. All the people that really want to make a difference and build solid revenue, not treat this as a lottery ticket or as a casino, but you're actually serious about trading and you want to make consistent gains. You don't want these to be some random events when you make money. Let's see, what if you already have Benzinga Pro? Kenneth, you're going to have to call me for that one. That seems like a very specific question. This does include Benzinga Pro. There's in the description of the video on YouTube, it has my email and my phone number. That is the only way that you can get that deal, is if you call me or you email me. That's the only way. So I'm going to leave that there if you have questions. Lou Braun, Monday morning. Yeah, we start 7. Well, actually, it starts at 7 a.m. Eastern. So that's when we actually start the class. All right, let's head over to the Zoom questions. I have a 9 to 5. Will I benefit from this? Yeah, this is a typical question I get, Charlie. Of course you're going to benefit because you need to be able to understand the markets, number one, if you want to get in there. It's like if you tell me you want to be a neurosurgeon, do you think you just walk in that surgery room and start, popping brains out and stuff? There's a process for everything. And the fact that we as traders, retail traders, are able to go in there with big lumps of cash and trade without knowing what we're doing. There's only one. I mean, there's a couple of corporations that benefit from that. But if you're going to do that, you might as well send a check to Goldman Sachs, because you're literally just handing them over your money when you're doing that. So or, donate it to charity or give it to Goldman Sachs. But if you're joining the market with huge loads of cash, not knowing what you're doing, that's really where it's going to end up. And it's unfortunate, I get those calls and I don't like those calls, but our job here is to help you guys become better traders, which is why we made this a reality, the trading school, giving you guys full on education, full trades. The Affirm trade was a good one. You see Matt's trade on oil. So of course, Charlie, you're going to benefit from this because the classes are recorded, they're uploaded. When I was going to college, no class was recorded. It was never uploaded anywhere. So in this case, you actually do have that benefit. And this class actually makes you money. Okay. Unlike some of the stuff you might see in college. So this is probably going to be the best class you can take in trading, I'd say. And I've tried a couple. I could tell you none of them are as give you that human touch, that people touch. None of them are really focused on their no trader left behind mindset that we are so focused on, because Benzinga is for retail traders. That is legitimately what we stand for. We stand to help and empower retail traders around the world, because we know that we got the short end of the stick, right? Who moves money? Big money. We don't have billions stacked around, but they do, so they can move markets. And we need to be able to learn how to benefit from those moves in the market that happened when big players come in or come out. But even if you have the 9 to 5, this is extremely beneficial because of the recordings are there. And if you have any questions, you have office hours where you can follow up with Mark Putrino, and you can literally get all your questions answered. So any doubts that you have, anything that you weren't able to get from the lesson, number one, you can always rewind the lesson. You can go to the mid-market update at noon and ask your questions there. But you can also set office hours with Mark Putrino. I mean, that's pretty valuable to me, if you ask. So anybody that has a 9 to 5 here, this is definitely for you. That's why we did the recordings. That's why we put them there. So more importantly, guys, you need to treat it as a career, right? Treat this as a career. Don't treat this as a casino. If you start a business, you definitely want to succeed, right? Would you be gambling around your business? That's the most irresponsible thing I could even think of somebody doing. So don't do that. In on the other side, get the education that you need to run a successful business. Okay. There's no mentorship on how to run a successful business, because otherwise, they'd be doing it themselves, not telling you how to do it. So as a trader, having this resource there with Mark Putrino, who's focused on the education, that's a gold mine. That's a gold mine for all you traders. Even if you're new or experienced, it doesn't matter. Knowing how big money plays and thinks and moves the markets and everything, their analysis, that's going to help you become a more successful trader. That way, you're not really relying on this emotional trading. If you don't have any education for trading, and I mean real education, I'm not talking about, no TikTok video, okay? I'm talking about real education from real money managers. That is what you need to be listening to. Because if you don't have any education, you're going to fall back on emotional trading, which is what retail traders love to do, right? If it's going down so much and I have to sell, or it's going up so much I have to buy. So having a strategy, having an exit and entry plan, knowing your risk profile, all of these things, you already should know them and do them before you make the trade, not figure it out as it goes. That's called winging it. And it doesn't work all the time. More times does not than it does work. So keep in mind, this is an education. It's a lifelong process. So a lot of you guys that joined today, you will be able to continue to get that education. It's not like we cap you at 1 year. A lot of places you take one class and then you take the class and it's over. You can't take it again. We are taking a different approach, so that if you still want to trade around Mark Putrino, the former hedge fund manager, if you still want to have that great experience of trading with a community of verified retail traders, no bots, no fake accounts, no pump and dump chats, trading with people that really want to make money and that want to help you as well, not just make money, but learn. So that has no price to me. I know that because this wasn't around a couple of years ago. So having this is a great advantage if you're starting or if you're already experienced trader. It's always a great thing to learn from the big minds. So keep in mind that this is a deal we have till midnight. So after midnight, you probably won't be able to get it. In the meantime, you do have access to the deal. I posted it on the chat. And if you guys have any other questions about the trading school, let me know. Just because I do have to log out. I got a lot of calls and emails from you guys, and going to have to get back here with you guys on that. So yeah, just to recap, if you just joined, we did a small workshop here with Mark Putrino. He's the instructor at Benzinga Trading School, where we're teaching about momentum levels. We're talking about investment psychology, chart patterns. I mean, you guys can see the whole deal here. Momentum, trends, levels, introduction and philosophy to the capital markets, market principles, analysis and sentiment, investment strategy and trading systems, investment psychology. You literally will create your own trading models, which is pretty cool. And you'll have a specific strategy. You'll know what you're doing, and you'll have a reason to take a trade, not just because it's trending on any of these places. Marlo Lagos, can I sign up now and start in 2 months? Yes, that'd probably be smart. Otherwise, I mean, that way you don't, because the price in 2 months, I guarantee you, it definitely will not be even close to what it is today. So yeah, you can do it. And the best part is that all the classes will be recorded and uploaded for you, waiting for you to get started. So I'll drop the link one more time, guys. I'm going to head out here. I have some people that I need to call back. And if you still have any other questions, feel free to drop them out now before we do close the stream for the trading school special that we're doing today, is Sunday. And good luck on your trip, Marla. Hope you enjoy it. All right, we're going to give you guys a couple minutes on the YouTube because we know it's delayed. If anybody has questions on joining the trading school, type them out before we head out. And just know the deal is off at midnight. Could be earlier, but who knows? But yeah, we're going to say midnight just to keep an estimate time. Joshua, hi, Rodrigo. I think the school is better for my level and needs them. Okay. Can I move? Joshua, you're going to have to call me for that one. I don't know. We'll see. We'll have to take a look at that Monday. All right. Lou Brown, why is it that stocks are moving in the middle of the night? I don't think any stocks are moving here in the middle of the night. I don't think you definitely can't trade unless you're talking about futures. Okay. All right, guys. Well, this has been great. Thanks a lot for joining us here on this workshop, this amazing trading school workshop. There's a lot of students here already. There's a lot of people here that want to join as well. So if you're a student, congratulations on being here and making sure you put your education on top of everything else. And for those that are still deciding to join, you got nothing to lose. 7-day money back guarantee. And you're talking to a former money manager who traded with Steve Cohen, that hedge fund, $27 billion. Yep, that guy. So yeah, the deal will expire at midnight. Make sure to sign up and join. If you have any questions, you can always email me or call me. I left my contact there. It's on the description as well on the YouTube thing. So just want to thank you guys for being here, for joining us on a Sunday. And keep rocking, guys. Keep trading. And thank you for joining us here at Benzinga's educational workshop.